Today, we are going to look at Zeta stock and a huge announcement of recent, and also do a fundamental analysis equity research report as of July 19th, 2026. I'll also walk you through exactly what I'm seeing right now, because this setup for Zeta Global heading into this week is genuinely one of the more complicated and interesting ones I've had to think through a while. And there's a lot at once, and I want to make sure that you understand it all before Monday begins. So this is Dr. Wilson behind the video, and please like, share, and subscribe. Now, looking at the market conditions, the story for Zeta this year has been a wild transformation story. The stock closed Friday at $21.68, up 1.31% on the session. It traded in a range between $20.60 and $22.49 on Friday. And that number tells you a lot about the volatility this name has seen. Zeta is up about 6.5% year to date, but that doesn't begin to capture the ride. The stock has a 52-week range of $14.37 to $25.95. That means from its 52-week low hit in late March, the stock has rebounded more than 50%, but it still sits about 16.5% below its 52-week high of 25.95 set on June 2nd. So the market cap currently sits at about 5.4 billion. Now, here is what makes this setup so fascinating. The business itself is in the middle of a complete strategic transformation. This is no longer just a marketing technology company. Management is repositioning Zeta as an intelligent AI infrastructure company, and the market is trying to figure out what's that worth. Now, let's start with what actually happened in this past quarter, because the earnings picture tells you a lot about where this company is heading. Q1 2026 results were a beat across the board. Revenue hit $396.3 million, up 49.9% year over year, and beating analyst estimates of $370.5 million by about 7%. GAAP EPS came in at negative $0.05, beating estimates by $0.01. Adjusted EPS was $0.16, beating estimates by 12 cents by 39.2%. Net loss narrowed to $13.2 million, a 38.7% improvement year over year. Adjusted operating income came in at $42.61 million with a 10.8% margin. The guidance was the real story. Management raised full year 2026 revenue guidance by $30 million to a midpoint of $1.785 billion, representing roughly 37% growth. Q2 2026 revenue guidance was raised to between $419 million and $422 million, exceeding the consensus of $415.5 million. Adjusted EBITDA guidance for the full year was raised to $397 million at the midpoint, representing 43% year-over-year growth. Now, let me walk you through the fundamental picture, because I think it's critical that you separate what's happening to the stock price from what's happening to the business. Zeta Global operates on omnichannel data-driven cloud platform that provides enterprises with consumer intelligence and marketing automation software. The company's platform helps businesses acquire, grow, and retain consumer relationships, but the business is evolving rapidly. The Athena AI platform is the centerpiece of the growth story. Management described Athena as an accelerant, bringing AI directly into marketing workflows and removing barriers to enterprise-wide adoption. Within the first week of rolling out Athena to all enterprise clients, the company saw a 7x increase in AI-powered interactions, with 60% of platform AI usage attributable to Athena. That's not incremental improvement, that's a fundamental shift in how customers are using the AI platform. The enterprise customer base is scaling. In Q1 2026, Zeta reported 189 super-scaled customers, those generating at least $1 million in trailing 12-month revenue, marking a 19% year-over-year increase. Average revenue per user for these customers was $1.7 million. Management highlighted that performance was driven by new customer wins, rapid expansion among super-scaled enterprise clients, and increased use of the Athena AI platform. Now let's talk about the elephant in the room, the Palantir partnership. Because this is one of the single best and biggest strategic catalysts for Zeta in 2026. On June 23rd, Palantir and Zeta Global announced a 7-year strategic partnership to build a unified data and AI infrastructure for the future of marketing. Under the partnership, Zeta's data cloud will be re-architected on Palantir Foundry infrastructure, with Athena by Zeta remaining as the application layer. Foundry provides the ontology, governance, and operational infrastructure that enterprise data demands. What does this mean financially? CEO David Steinberg said Zeta expects to complete the first phase of the Palantir integration within 30 to 40 days. And he added that Zeta expects to have at least one joint launched enterprise client from Palantir's side during the current quarter. CFO Christopher Greiner said the Palantir partnership increases confidence in Zeta's long-term model, and the company is already ahead on the operating metrics it has published for its 2028 targets. So this partnership gives Zeta access to Palantir's enterprise client base and Foundry's governance infrastructure, while Palantir gains a foothold in the marketing technology space. This is the kind of strategic pivot that can fundamentally reshape a company's growth trajectory. And it's not just Palantir. Zeta also has announced strategic partnerships with OpenAI and Snowflake. So the company is positioning itself at the intersection of AI infrastructure and marketing technology, a space that's attractive and attracting massive enterprise spending. Now, let's look at the analyst sentiment, because this is where things really get interesting. Now, according to 14 analysts polled by S&P Global, Zeta Global has a consensus rating of strong buy with an average price target of 28.68, implying roughly 32.3% upside from current levels. So the targets range from a low of 22 to a high of 44. 10 analysts rate it strong buy, 2 rate it buy, and 2 rate it hold. Now, looking at the recent analyst moves, we see Bank of America analyst Matt Bullock raised the price target from 24 to 28 and kept a buy rating following the Palantir partnership announcement. Now, Freedom Capital Markets initiated coverage with a buy rating and a 29 price target. So the average 12-month price target across global institutions is about 28.33 to 28.68. Wall Street sees significant upside, and the consensus is overwhelmingly positive. Now, if you are benefiting from the analysis so far, please give us a like, share, and subscribe so that we can reach more people with what is happening with this stock. So what are the key levels I'm watching on the downside? I see $20.6 is the recent intraday low. Below that, the 52-week low of 14.37 is the next major support. If we break that on heavy aggressive volume, that tells me we need to wait for lower levels before buyers come in with real size. On the upside, I need to see a clean close above $22.5 to feel like momentum has stabilized, and a close above the 52-week high of 25.95 would be the signal that the recovery leg is resuming. So my best case for how we trade this week is continued volatility with a bias towards upside as the market digests the Palantir partnership and looks ahead to Q2 earnings. And the stock has also rebounded more than 50% from its low, but still sits below its highs. So this is a week where patience is the move. We are watching the tape carefully on Tuesday, Wednesday, Thursday tells you more than any analysis I can do on such a Sunday. And so the other thing we need to be take care of is the valuation, that even after the pullback from its highs, the stock trades at a forward PE of about 22x, and the trailing PE is negative due to the Q1 loss. So the company is projected to reach 2.5 billion in revenue and 239.8 million in earnings by 2029, but that requires nearly 20% yearly revenue growth and a substantial earnings ramp. So at a 5.4 billion market cap, a lot of that future growth is already priced in. So for anyone thinking about options this week, given where implied volatility is sitting right now, especially with earnings coming up in August, premium is elevated, and that creates both opportunities and risk. So if you own shares selling covered calls in the $27 to $30 strike range for August or September, collects meaningful premium while still leaving room for a recovery move. So if you want to add shares but want some margin of safety, selling a cash secured put around $19 and $20 gets you exposure at a cost basis that's close to recent support levels. So size, whatever you do appropriately, this is not the week to just go all in. So the dates I'm looking at are just beyond just the day-to-day price action. I'm looking at the August Q2 earnings. Also, I'm also looking at what management has to say. And also the average price target that I have is 28.68, which implies over 30% upside from current levels. So, but my analysis is the company has a transformational problem right now, not a business problem. So the market is trying to figure out what an AI infrastructure company is worth versus a marketing technology company. And I think when a company successfully executes a strategic pivot like this, the market eventually reprices the stock higher. So I'll possibly be back with an update as soon as I see how Monday opens and which direction the tape is leaning. So drop your question in the comments. And this is a note. Remember to fear God and give glory to Him, for the hour of His judgment is come. Worship Him who made heaven and earth and the seas and the fountain of waters. That's Revelation 14 verse 7. And God is calling us that we should worship Him and only Him, who is our Creator. Wish you the best and blessings. Please like, share, and subscribe.